Good morning. This is my first talk in Malaysia. Any encouragement? No? Thank you, thank you. Are you very disappointed? I'm not a Kung Fu Jackie Chan, okay? Right? I'm come here to convince you why invest in Hong Kong stocks. As we know, Hong Kong is one of the most important financial centers in Asia and even in the world. Its capital market is also one of the largest stock markets in the world. In terms of market capitalization, Hong Kong stock market is the second largest in Asia after Japan. As mentioned before, Hong Kong is one of the international financial centers, can be in line with international standards. Take for example, the accounting system of Hong Kong is in line with the international standards. It's relatively mature due to the long history of the Hong Kong financial market. Also, it's an effective and mature market. The increasing interest in Hong Kong from overseas companies reflects their confidence in our regulatory and legal system. Hong Kong has a sound economy and an effective financial and banking system. Along with the economic development in mainland China, Hong Kong has taken an important role as an international capital market for those mainland companies to raise funds. Hong Kong is also the special administration region of China. Its strategic location as the gateway to mainland China offers tremendous potential for further growth. One of the most important factors why we invest in Hong Kong stocks is the China concept. As we know, China is one of the big economic powers. With the recovery of China's economies and the internationalization of renminbi, Hong Kong as an important gateway for overseas funds to enter China will benefit. The Hong Kong stock market ranks high in depth and liquidity. It's one of the largest in derivative turnover. The Hong Kong Exchange offers a wide range of financial products, for example, security, futures, warrants, options, etc. Investors can make use of derivatives to hedge the risk of stock drop, for example, the stock option. Also, we can make use of the option strategies to increase revenue. If you are interested in the option trading, perhaps I will conduct another seminar later. Also, the H shares are listed in Hang Seng Index, which further enhance the importance of Hong Kong stock market. Before I go to the market outlook, I would like to give a brief introduction of the main classification of the Hong Kong stocks. We have the blue chip stock. Generally refer to share issued by strong and high quality listed company. Hong Kong Hang Seng Index concerns stocks in general are regarded as the blue chips. And Hong Kong Hang Seng Index currently comprises 43 constituent stocks, which are representative of the market. The aggregate market capitalization of this stock accounts for about 70% of the total market capitalization of the Hong Kong stock market. If you want to check the detailed information of the Hong Kong stocks, you can go into the website hsi.com.hk. Another type of share is the H-share. H-share refers to the share of company incorporated in mainland China that are traded on the Hong Kong Stock Exchange. They are mainland China enterprise listed in Hong Kong Exchange. Many companies float their shares simultaneously on the Hong Kong market and one of the two mainland China stock exchange, i.e. Shanghai and Shenzhen Stock Exchange. Now I want to have a brief review of the performance of Hong Kong stock market in 2009. After a decisive 2008 world stock market recorded a market rebound in 2009, even though the economics was in crisis. In Hong Kong, the rebound was even more remarkable. The Hong Kong index rose by 32% in 2009, its best annual performance for a decade. Now if you look at the Hang Seng Index, we can see that the index trend upward with high volatility. It takes its low in March at the 11,000 level, and then it trend up rapidly to 23,000 in November. The increase was more than 100%. If we look at the Bank of Communication daily chart, you can see that last year, the reward is more than 200%. The Hang Seng Index remains fundamentally attractive as re-rating potential exists on the back of a strong economic outlook and promising corporate earnings. Hong Kong stock market will maintain its upside momentum due to the recovery of China's economy after the financial crisis. The market outlook rests on the Beijing's policy direction because a monetary tightening would lead to a capital crash. Up to now, the monetary policy is mild and is in the right track. We do not believe Beijing's tightening policy aims at property sector to hurt mainland property developers because it believes the balance of supply and demand is still in their favor. Excess liquidity